The World Bank has lowered its global growth projection and warned that the economy might enter a period of stagflation similar to the 1970s. Now, based on the bank's latest Global Economic Prospects report, global economic growth would slow to 2.9% this year from 5.7% in 2021, 1.2 percentage points lower than the 4.1% forecast in January. According to the global lender's emphasis on stagflation risks, economic growth is expected to hover around that level through 2023 to 2024, while inflation remains above target in most economies. Well, we'll take a look at the impact on the local economy, and for further analysis, Olaolu Boboye, macroeconomics analyst at Cardinal Stone, joins us. Hello, Olaolu. Good to have you join us this morning.
Good morning, and thank you for having me.
Absolutely glad to have you join us. Now, we're looking at this recent report where we have the World Bank lowering its global growth projection and also giving a warning, issuing a warning that the economy might enter a period of stagflation, which is similar to what... Can you hear me? All right, Olaolu, if you can hear me, we're looking at the projection by the World Bank. First, it has lowered its global growth projection, and it's also warning that we might see a period of stagflation similar to what we saw in 1970. Can you hear me? Are you with me?
Yes, I'm with you.
All right, now, based on the World Bank's latest Global Economic Prospects report, global economic growth would slow to 2.9% this year from 5.7% in 2021. And we're also saying a lot of numbers and all of that. How would you respond to this particular news?
Okay, once again, thank you for having me. It's clear that, the disposition of the global economy at the moment is largely tilted towards the downside. And, the view of the World Bank largely aligns with ours. We think that the Russia-Ukraine war, has dampened the economic recovery, that we saw in 2020. The initial thought at the start of the year was that the global economy will continue to strengthen, even despite some expectation for withdrawal of the monetary stimuluses that we saw in 2020 and 2021, and as well as fiscal stimuluses. So we think that downward revision of the IMF, of the World Bank, is largely due to the Russia-Ukraine war, that has dampened global prospects and as well as heightened up inflation, right? And towards Q3, Q4, we are likely to have stagflation, like they rightly said, a period where inflation is relatively elevated, where growth is slowing down significantly compared to, where we're coming from. And in some countries, we might be having, elevated inflation, especially elevated unemployment, especially in the sub-Saharan African region.
All right, you talked about the Russian-Ukraine war and all of that. Is that the only culprit here? Aren't there other culprits?
Yes, certainly there are other factors to driving the downward revision and the slower growth expectation, right? We have some countries that are experiencing COVID concerns, countries like China. Recently, aside from the recent ease in lockdown in China, for almost 3 weeks we saw lockdown in China. Aside from that, emerging markets countries like in the sub-Saharan African region, has battling in some domestic issues, like social unrest in Ethiopia, for instance, famine in the on part of Africa, right? But the largest factor, that is motivating these.
All right, if you can hear me, you were talking about the largest factor, motivating what's happening now. I guess you were trying to say it's the Russia-Ukrainian war. If you can hear me, is that correct? Okay, there you have it. He was talking about some other factors that are responsible for this downward decline and downward projection. I guess you can hear me now.
Yes, I can.
Okay, you've said a whole lot, really, but now let's narrow it down to Nigeria. How does this affect Nigeria? All right, I guess it's the network. We can barely hear him now. That's Olaolu Boboye talking to us about what's happening, really, the World Bank's projection. And then he said a lot about the factors that are responsible for it, apart from the Russian-Ukrainian war, beg your pardon. All right, I can hear you.
Yes, essentially for Nigeria, right, taking it from the growth perspective. In 2021, we saw the economy recovered, growing by 3.4%. Our projections this year is that growth will continue to strengthen. In Q1, we saw first quarter growth touching the highest first quarter growth level that we've seen since 2015, which just gives us an indication that the economy is strengthening back to pre-2016-2017 recession, right, which is a good positive for Nigeria. So we think that this growth will continue to strengthen, largely driven by the non-oil sector. For the oil sector, production challenges due to aging infrastructures, due to oil theft to continue to put a cap, and continue to pressure that sector. But for the non-oil sector, we are kind of optimistic on it, right? And the advantage that Nigeria had, compared to some other countries, is the limited pass-through of the Russian-Ukraine war on the Nigerian economy, right? Also from the inflation perspective, the impact of the Russian-Ukraine war has not really had a very significant impact on our inflation numbers, right? Because of the limited pass-through for the Russian-Ukraine war on our domestic economy. But we saw, when you compare it to some other African countries who are basically net oil importers, right? They were much more badly beaten by the Russian-Ukraine war. Take, for instance, Ghana. Inflation in Ghana now is above 25%, right? That's the highest level we've seen in 8 years. And that's because of energy costs and pass through to food costs. But for Nigeria, we are kind of shielded because Nigeria is net oil exporter compared to net.
All right, so Olaolu, are you saying Nigeria should go to bed and do nothing with this report?
No, absolutely not, right? If you look at inflation in Nigeria, it's still pretty much elevated. A single digit inflation is what we think is, palatable for the country. We think that will be good, right? So we are still far from that level. Also, when you look at the current inflation trend and you compare it to the band, that the CBN has set, we are far off from it, right? So there's a whole lot that the government can do, especially in terms of improving infrastructures, that has positive pass-through to inflation. For example, tackling security concerns in the northern part of the country and other part of the country basically could have positive impacts for farmers, going back to the farmer, as well as boosting farm produce. So right, so Nigeria still needs to be worried. But then the story here is that compared to some other African countries who are net importers of energy, Nigeria seems to be slightly in a better position.
All right, so how do you think Nigeria is responding to tackling inflation? How well is Nigeria responding to tackling inflation? Because you have also said that a digit inflation would probably have put us in a better stead.
Hello?
Right, can you hear me now? If you can hear me, I was saying, how do you think Nigeria is responding to tackling inflation? Okay, there you have it. Olaolu Boboye, I guess we're having issues hearing him. But of course, we've been talking about stagflation, and he's saying that, well, Nigeria may be well postured, especially looking at the fact that the effect of this on some other countries, African countries, might be way more than what Nigeria may be experiencing. Olaolu, if you can hear me, I was asking, how do you think Nigeria is responding to the issue of inflation? How well is Nigeria tackling inflation?
Okay, so if you look at the last monetary policy meeting that was held last month, one of the things that we saw the CBN explicitly mentioned is the need to tackle the elevated inflation. We saw an hike of about 150 basis points, increase in NPR. That's just to tackle inflation. But then we should not forget that from the monetary side of things, they can only tackle demand-sided pressures. Basically, money in the liquidity, money supply. Too much money chasing fewer goods, basically. So they can only tackle that. But then we still have the structural issues, which is driving cost of production up, which might require the effort of the fiscal authority. In recent months and recent years, basically, I would think that the monetary fiscal authority has kind of taken the back position in tackling inflation. It has been motivated towards the monetary side of things, trying to curb this current inflation and bring it to check.
All right, so generally speaking, now what's your outlook for the economy as Nigeria enters the electioneering process?
So firstly, for growth, we think that growth will set at about 3% by the end of the year, which is good. It gives us an indication that we're gradually returning back to 2016, pre-2016, 2017 recession levels. For inflation, we think that inflation will continue to tick upwards because of these effects, because of energy costs, and as well as a bit of seasonality factor in the food segment. For FX, we think that FX might see a bit of stability in the I&A window, right? Given the fact that the CBN is not supplying as should in the market. But for the parallel market, we think that the premium will persist. We think that it will be maybe above 600 that it is at the moment. While for monetary policy, we think that the CBN will continue to monitor the situation of things, especially on the inflation things. That will guide their thoughts on if they still have to go more hawkish or just stand pat on interest rates.
All right, I understand that you do not feel that Nigeria is at a disadvantaged position, especially when it comes to this particular report from World Bank. Be that as it may, how can we actually ensure that we mitigate the impact should stagflation, just as predicted, should we get into that situation? What can we do to mitigate the impact on the Nigerian economy?
Okay, so again, like I mentioned, right, the limited pass-through of Russia and Ukraine war to Nigeria has kind of protected Nigeria. But notwithstanding, we still have our own structural issues here, which we think that the government should focus on, tackling the structural issues, resolving the domestic concerns that we have. For instance, despite the fact that growth is looking great, at 3% levels based on our projection, it's still yet to be inclusive in the sense that when you check the informal sector, which is relatively large, they are yet to feel the direct impact or the impact of the improving economy. And that's because the growth is yet to be inclusive. When you look at Human Capital Development Index, when you look at unemployment, when you look at inequality, wealth inequality. So we think that the government and the monetary authority can collaborate to tackle these issues, right? That will have more impacts.
All right, thank you so much, Laolu Boboye, for sharing your thoughts with us on the show.
Thank you for having me.
All right, we've been speaking with Laolu Boboye, macroeconomics analyst with Cardinal Stone. Many thanks to him for coming on the show.